Hi, good afternoon. Thank you all for joining us today. During the second half of 2020, Fiserv launched its 6th Global Payment Survey, looking at the trends in payments on a global basis. One of the things that we saw in the responses was that there's been a strategic shift away from single point solutions and focusing on single elements of the payments, to really looking at how real-time payments, the move to extended data using the messaging standard ISO 20022, and the adoption of open banking is all working together to create an ecosystem to drive value for both financial institutions and the consumers, the users of those financial institutions. And really what we saw in the report was a focus on the customer and what they're trying to achieve, rather than looking at the types of products that could be offered out to them, and really looking at where the financial institutions bring real value to the complete process, the whole end-to-end interaction, and really trying to use that to differentiate the services that they can provide. And I guess one of the things that came out of that survey was that there is a big challenge of how to extract new forms of revenue to generate value, not just from the movement of the funds, but also to provide greater visibility for the whole area around cash management, the normalization of data, how to use that data to support innovation as we move the industry forward. Today, I'm lucky to be joined by a very select panel of payment experts, including Derek, Sue, Ramesh, to really discuss this challenge and look at where there are opportunities to really drive that value, to increase the revenue, to increase and provide a better customer experience, while at the same time under the pressure from neobanks and large fintechs. So before we get into sort of looking at the questions and taking the discussion forward, I'd like to just ask Ramesh, Sue, and Derek to introduce themselves. So Ramesh.
Hi everyone, thank you, David. I'm Ramesh Siromani. I'm a Senior Vice President of Payments in the Royal Bank of Canada. And my role is really to kind of develop the strategy and propositions for payments across the bank at the enterprise level, including innovation and payments modernization, which we'll be talking about, both working within the bank and across the industry with my peers. And very, very happy to be speaking to you all today, and look forward to the conversation.
Thank you, Ramesh. Sue.
Yep. Hi, everybody. Thanks for joining. My name's Sue Whitney. I'm Vice President of Payment Strategy and Relationships for Central One. Central One manages payments for more than 250 credit unions, and it's one of our 3 core lines of business. We're very focused on making sure all of our credit unions cross the finish line and are able to deliver the incremental value associated with all of this change, so their customers continue to benefit.
Thank you. And Derek.
Hi, everyone. Thanks so much for joining. So my name is Derek Vernon, and I head up Payments Modernization, North American Commercial Deposits, and the North American Corporate Card business at BMO Financial Group. I also act as the industry co-chair of the Industry Steering Committee supporting the Payments Canada Modernization Program. Very, very happy to be here today. Thank you.
Thank you, Derek. And that really sort of drives into that first question. Obviously, there's a lot of change happening in Canada, a lot of modernization around links, the real-time rails, the adoption of extended data sets, and the use of open APIs. So, Ramesh, maybe I can start with you. What do you see as the main benefits to your customers, and really what's been the biggest challenges to that adoption and modernization?
Thank you, David. There's a lot in that question. It's a generational shift we are going through in Canada, and right from we are moving from batch to real-time payments, moving from simple payment to data-rich payments, and also the way we siloed kind of looking at payments to more open systems and data flows. So I think the benefits to customers I think three broad buckets would be always on faster payments with higher limits, immediacy of payments, getting it on time, and many use cases which I'm sure talk about enables customers to immediately start using payments and have some emergency payment flows. The second thing I would say is the rich data. I think there have already been a couple of sessions which people are talking about the amount of rich data. We have a new data standard, ISO 20022, which enables us to provide much more detailed data along with the payment message. And third is, I think, because of the flexibility and openness of how we are building out the systems, it's going to enable more frictionless, seamless customer experiences. So I think those three things are what will benefit Canadians the most. In terms of challenges, David, I think we are in the last throes of implementation. We've been at this for the last 2-3 years. And it's important that we kind of finish nicely. We are almost at the finish line in terms of links, and RTR is coming up. I think implementation was not an easy task, so we'll have to finish well. I think second would be adoption, right? Some of these things like ISO 20022 require people to actually adopt and use it in the right way. It requires building out, customer systems. Sometimes third-party aggregators will do this. Sometimes customers will have to do it themselves. So adoption and this managing the transition would be the challenges I can think of.
That's a very interesting point. Obviously, that sort of adoption and education is going to be key to actually driving modernization forward. So maybe I could ask you the same question.
In terms of challenges, I'll start there. This is a Herculean effort. It is a lot of change happening all at the same time. I represent and speak for smaller financial institutions, and getting across the finish line, finishing well, as Ramesh put it, is a big challenge. And we are heads down, all of us, focused on trying to do that right now. So the other thing I want to double click on that you commented on in your introduction is this is a foundational pivot for the way financial institutions actually think about what it is they're offering their customer. And so rebuilding the engagement model to let all of your staff internally and the end customer appreciate that we're moving from a siloed product kind of construct into a utility-driven value system is a really big change in our mindset, and bringing our own staff and their direct customers, not to mention the rest of the ecosystem, along on that journey is going to be difficult, and it's going to take a while. And so it's exciting to think about the fantastic opportunity of real-time payments and always on and data rich, but we have to bring along a community and manage expectations along the way and help the ecosystem see the value for us to really benefit holistically.
Yeah, so that's very interesting, thinking about our internal staff, because we do think very much of the customers, but getting the internal staff to really understand that level of change and what it means is a really interesting point. Derek, do you want to sort of follow in terms of the question?
Yeah, happy to. Thanks for the question, David, and my colleagues did a good job kind of covering links, and we're really excited about that implementation landing very shortly, and RTR. So, there's so many benefits that I can focus on. I truly believe there's many benefits both for retail and commercial customers as we work to modernize the country's payment systems. But maybe I'll just talk for a moment about APIs. So an API, to put it simply, it's a messenger. So think of it as a messenger that takes requests and then tells the system what you want to do, and then returns a response back. Think of it as kind of like a server in a restaurant that takes your order and brings back your food once your order is processed. And APIs have been around for a long time, and it's actually nice to see that they're becoming more mainstream and accessible to a broader mix of customers of all sizes and across all industries. From a BMO perspective, we've been doubling down on our efforts in this regard. We truly believe that a large segment of the commercial customer base will take advantage of APIs to connect to the likes of the real-time rail and other new capabilities. To take advantage of services such as getting account information, initiating payments, performing services like account validation. These things are all going to happen in real time, integrated directly into that business's in-house transaction management application or ERP, and all being able to be done without any human intervention, which I think is really, really important. And the use of APIs also tie in very nicely to the emerging trends in open banking, which will allow much easier integration with third-party applications and fintechs to safely and securely access customer data and further integrate downstream to provide even more value add for customers, which is key. In terms of the second part of your question, you asked about challenges associated with PayMod for customers, and there are a few. We've covered a few here, but you know what? I look at it as our role as financial institutions to really help make sense of it all and assist our customers by providing excellent advice, ongoing education, which you mentioned, and strong collaboration. To be successful, I truly believe we need to work together as a group, as an industry group on this journey. As Sue says, this is not an overnight thing. It's a big change. And we need to work closely together to enable these capabilities and ensure that they're coordinated and sequenced in our delivery approach. Maybe one other challenge that I'll quickly cover is talent. And there's a couple of sessions at the Summit on talent, which I'm very pleased to see. There's only so many people capable, payments experts in this space in the country. And so I truly believe that there's an opportunity for us as an industry to continue to attract more talent into the payment space, which quite frankly will benefit everyone, including our customers, to take advantage of all the transformation underway.
That's interesting. Derek, if you don't mind, if I could just take you back to the point around the open APIs. Do you see sort of the modernization around APIs, meaning that the payment element is becoming ever increasing faster and less visible and seen as almost a commodity? And if so, where do you see the sort of the revenue opportunities, and how do you see the sort of the new competitors from the likes of the fintechs who are very much digitally aware, data first in their approach?
I do see that the payment piece, kind of becoming more invisible in the experience. We're seeing that trend already. The overused classic use case of getting into the back of an Uber, we don't think about the payment anymore. We think about the experience. We think about the friction that's been taken out of that experience, and we just take our ride and we just assume that the payment will happen behind the scenes. I do think that it's the data. We talked, Ramesh mentioned that as well. That's really the holy grail here. The data that we can take advantage of throughout the experience, that we can start to look for new and interesting, innovative ways to monetize. I know our customers, if we are adding value and we're taking cost out from their perspective in how they operate and driving up their efficiency, I think they'll be prepared to pay, which will generate revenue for those that are part of that mix.
Oh, that's very interesting. Maybe I could ask Ramesh you the same question. Do you see the sort of the drive to sort of invisible payments and instant payments, and how do you see the sort of the competition from the sort of the very large fintechs really around that data and digitalization?
I'll pick up on where Derek was talking about APIs and the examples he started giving. I think the rich data is going to enable a lot of things. Like today, David, we kind of see it in already happening with APIs. For example, when I file my returns, and CRA automatically pulls in all my tax details from the bank. So similarly, I think what we'll see because of the data-rich payments is it'll enable a lot more of use of that data for different purposes, right? Either for individuals or for corporates, right? For corporates, there are so many use cases, whether it's an auto repair shop wanting to pay invoice at month end, wanting to give all the invoice details, for example, or for a restaurant who wants to kind of combine their cash and payroll services, right? And kind of have a proper solution together. Or, for example, insurance companies wanting to pay a bulk, send claims and with all details in that payment file. You can have multiple, or a property management company who wants to have a portal for renters to kind of go in and make payments. So as you said, the overlay services in each one of this could be very different. And that will what add value, as Derek said, as long as you're providing added value to the customer and making it frictionless and seamless, and use that data, and APIs and all these are tools. For example, in RBC, we have in the healthcare side, we've kind of developed something called Dr. Bill, which enables the whole healthcare segment to use data both in the payments and the healthcare side. Ojo Home, which does the similar thing for home buyers. So there are various examples. We'll see this proliferate, and I'm sure there will be large fintechs, very innovative small players, and all of us across this table wanting to use and create use cases for the customer.
That's very, very, very interesting in terms of how we can start to generate those use cases around the data itself. But I guess, coming back to you, Sue, in terms of how we're driving the instant payments, and sort of coming back to your statement around the education, both internally and externally, and sort of feeding on sort of that new use cases that Ramesh was highlighting. How are you seeing your organization taking on and ensuring you get that sort of client retention, as we're seeing such a vast movement in what you can actually offer to the customer, as well as that sort of much bigger marketplace that they have for choice?
Yeah, it's a great question for us. We do see this as an existential moment for the credit union movement in Canada, because we have always been very community focused and always put the customer and their needs at the center of what the credit union does. And so when you reflect on the vast possibilities that can occur and the potential for the shifting of the role and the relationship with the customer, from a credit union point of view, what payments modernization means is it's a platform and enabler for us to accentuate our dependency on collaboration and celebrate it, because it's who we are and what we're about. We can't do everything the way a large financial institution can. There are lots of things we have to partner with to be able to deliver value to the customer in a competitive way. And so we look at the API universe of tomorrow and today, for that matter. We're like Derek, we're all over the API construct, because what it does is it blows open the doors and puts fresh air in between every relationship you have and enables collaboration models that you haven't been able to use before. It was just too structured and siloed. So when I think about the changing opportunities and the hill we're climbing, there's so much possibility at the end, because of the fact that we can continue to reiterate the central piece of what every financial institution has, which is its relationship and trust with its customer. And that if we continue to put ourselves effectively in that position, reinforcing that value, then we can be the enabler and the facilitator of the collaboration and the incremental value. We can harness the power of data. We can identify good partners. We can deliver different value propositions. And in a sense, we're reinforcing our value and maybe not making as much money as we have in the past, because payments has been a particularly lucrative revenue stream for a lot of financial institutions. But we'll make money in different ways, and we'll be reinventing ourselves, but at the core of it all, still retaining that central trust and treasured relationship with that individual customer.
Thank you. That's an interesting point. Maybe, Ramesh, I could sort of ask you to sort of elaborate on how you're looking at being that sort of center of the sort of the ecosystem, orchestrating those use cases. Where do you see those sort of services going, and the business products that sort of sit and take advantage of not just the instant payments element, but the APIs around it as well? You know, following on from Sue's point that you're almost sitting and providing a level of trust and value in that relationship.
Yeah, thanks, David. I think that ecosystem orchestrator is a pretty oft-used word nowadays, and everybody wants to do that. You know, how we would kind of look at this is, one is we've invested a lot in transforming our payments systems internally in the bank also, as we did this payments modernization across the industry. So to take, like I said earlier, and you know, Derek and Sue were mentioning, to take advantage of the rich data payments and the immediacy of payments, we need to also change our batch systems to real time, have the right data architecture to take advantage and provide those insights to either our individual clients or to business clients so that they can kind of better use. So think, for example, an individual client who wants to aggregate his you know, financial information, or think about, you know, making direct use the simple Uber example. There could be very complex ones which involve you know, the payment becoming frictionless for individuals. For corporates and large and small businesses, it's enormous amount of data for them, and how can they use that in their working capital optimization, or automating their accounts receivable and accounts payable, making sure their invoice reconciliations is seamless and manual interventions are done away with. Checks, you know, pretty old system, but it had some details in that which is not automated. Now you have much more. You can send entire URLs and invoices along with the payment. So there's tremendous amount of you know, things that can be done with the payment. What we do above that in terms of overlays, it could be, you know, firms like your own firm, David, Fiserv, who can aggregate for smaller players. Some of the, you know, we can't do it all alone. Some partnerships, we need to together develop some standards around request to pay, bill payments. I think there's an enormous amount of you know, possibilities, and it's a great potential for us to kind of bring Canadians to the next you know, generation in terms of payments and money management.
Thank you. And sort of following that on, Derek, I mean, Ramesh sort of highlighted that, you know, around the world where we start to see instant payments being developed, we do focus on the consumer and the person-to-person payments. But, you know, as Ramesh said, we should be starting to focus more on the business, the SMEs, the corporate banking, where traditionally they've been a big source of revenue. But how do you think that's going to change? You know, where do you see the sort of the customer focus, the revenue opportunities to drive off the new payment ecosystem, where payments are instant, they have a finality, they can take place whenever that business wants that transaction to take place within a bigger ecosystem that's API driven?
It's a great question. And, you know, I'm actually, just to comment on kind of fintech, big tech, I'm actually excited about the space opening up to more regulated competition, because this gives us more and more opportunities to offer, you know, enriching value-added partnerships than what exists today. And, you know, as an FI, I think Sue mentioned this, you know, we do many things really, really well, and we provide that trusted relationship, but that doesn't mean we're the best at everything. The ability to partner, you know, for the benefit of our customers really excites me. And, you know, from an FI perspective, again, it's a repetitive theme that you're hearing here and you'll hear at the conference is unlocking more data, across the end-to-end movement of the payment and the remittance information is going to bring so many benefits, and some of which we may not even thought of today. So the key, though, in my view, is we need to keep listening to our clients. If we listen carefully, our clients are telling us through our interactions with them, what they want and what they need, and enhanced analytics and being able to offer deeper insights and enhancing their ability to improve their working capital and liquidity through continuous enhancements of the traditional cash management capabilities that all these companies require, I think is going to be key. Just to keep going here, I think the pandemic has accelerated the need, right? We've talked about that. It's accelerated the need of the modernized payment infrastructure that we're in the process of building. And I think we've also benefited from the acceleration in the customer behavior shift and the willingness to adopt these digital payment alternatives that's required to enable this growth. So it's not just building it and they will come. I think now we're in a much better situation due to COVID. So if there's any bright spot, it's this shift to digital that's been accelerated that I think we're all going to benefit from. And given this acceleration, which in my view is just beginning, I think we're going to see things like the dramatic acceleration away from checks over the next couple of years. And we'll see customers embracing ISO 20022, the global data standard, to continue to drive the efficiencies and improve their experience with their own customers. I think they're going to see how the enhanced data is really enabling them through the services that we'll deliver and through partnerships that I mentioned to really enhance how they're interacting with their customers, which is truly what it's all about. The enriched data, again, it's the single most important benefit of payment modernization in my view. And we often refer to data as the new currency. We know that structured data will enable greater opportunities for robotics and artificial intelligence and machine learning capabilities, and that's going to continue to grow. It's going to enable platforms that we build to even better predict cash flow requirements and recommendations based on historical trending and drive even better quality insights into future payment and liquidity requirements. So lots of great opportunities ahead for SMEs, mid-market, and corporates in the space.
Thank you. I guess that sort of leads on. If I could ask Sue, I mean, we've talked a lot about sort of partnerships and, that very fine line between competition, cooperation. How do you see that sort of balance being maintained, and where do you sort of see other players joining the ecosystem? And, we talk about very much sort of partners coming in to support the proposition to the actual users, the customers. Do you see, businesses and consumers actually being brought into those sort of partnership opportunities directly?
So I think it depends on the customer base that you're talking about. In the world that I operate in, we see people are very comfortable with the fact that Central One delivers services to credit unions that include partners. So a couple of years ago, we created a venture capital firm and we procured a company in the cross-border payment space. We procured a significant share of it, and we now use that, and more than 100 of our credit unions have adopted that payment type that we offer. We couldn't have done it on our own. We've done it with them, and we got an ownership stake because we believed in it. That's one model. I think there will be lots of different models, and I can easily see, particularly as open banking takes hold, that we might not be the front of the relationship with the individual customer. We might be in the back, providing the payments capabilities and connected through a set of APIs to deliver value. Are we okay with that? Of course we're okay with that. If the customer has chosen that that's how they want to pay or get paid, and it involves a third party, that's great. We have a happier customer. Our model might be a little different than others.
That's great. I guess as we're sort of coming through this, people have probably noticed that I've got a very different accent to most people that they'll hear in Canada. And I guess that sort of shows how globalization is actually taking hold, and that we're driving instant payments, we're driving a common standard for the message formats around ISO 20022. Maybe, Ramesh, I could ask you, how do you see the future state of cross-border payments, particularly across those sort of key corridors of Canada, US, maybe Canada into the UK, and further on into Europe?
Yeah, thanks, David. As we've been kind of hearing so much about this ISO 20022, and it'll only increase with time. It has the enhanced payment information, solutions to automated reconciliations, etc., optimizing the tracking of payments. It also helps in anti-money laundering and kind of keeping track of that. And frankly, what needs to happen is interoperability, right? So between domestic payment schemes and the international payment schemes like SWIFT, all these have, and links, for example, our own large value is ISO 20022 enabled, and RTR, we are trying to get that done. So the interoperability will matter a lot when you think about how does the customer benefit and how does the ecosystem benefit. In terms of rollout internationally, what we are seeing is over the next 2 to 3 years, I would say, some countries in Europe, UK, where you are sitting today, in 2022-23, ISO 20022 mandates come into effect. We are seeing that in Europe, Target and other schemes, other clearing systems in Europe start adopting that. In the US, we're starting to see that in the 22 to 23 range. With links, we are adopting it, but in terms of mandates and so on, for us internally in Canada, those mandates will start to take effect late 22. So I think in terms of timelines, these timelines are important because, like you said, those key corridors between North America and Europe, and within North America, US and Canada, will start to kind of go along with, hey, Bank of England, Target 2, the Euro 1, and so on. And Fed and chips down south start to kind of completely take this on as a mandate. And then we will see that we can start to enable cross-border in a much more effective way. And then when the message comes in from one of these regions, we don't need to truncate that information. We can pass on that information completely into the domestic scheme. And the final customer gets that full detail and can track it from end to end. So I think the next 2 years, David, is what we would see a massive kind of adoption globally. And there will be a period of time when there will be kind of a transition between sunsetting legacy stuff and then completely taking on ISO. But the next 2 years is going to be crucial.
Thank you. And Derek, maybe I could ask you the same question. Ramesh talked about interoperability and that sort of global migration to the ISO 20022 message formats, but also talked about standardization of the actual content of those messages. It'd be interesting to get your view on that.
Ramesh covered the question really, really well. I think we need to, and I think Ramesh made a similar point. We need to think about this as a payment rail agnostic exercise, because the more we can build, we'll get more ubiquity and interoperability across payment rails to make this easier for customers. If we don't think about it in terms of the rail, we just think about it as adopting that global standard for data, irrespective of the rail that payment and remittance information is going to move across. So this movement to ISO 2022 will not only align all the domestic payment systems, and we've talked about that with links and RTR, but that's needed, for sure, for financial institutions as we're exchanging payment and remittance information in that standardized way. But it's also then going to broaden the interoperability and the ubiquity and the use as we start to think about other networks, schemes, exchanges in the US and in the UK. as we all move towards this standard. And it will take a little bit of time for us all to get there. We do have to be mindful of not creating another EDI where we've got all these different flavors of and versions out there. You know, as much as we can all move to a similar standard, I think that's going to be really, really important. And yeah, I guess at the end of the day, you know, ISO and there's tremendous opportunities for new innovations that takes the friction that still exists today. You know, there's many of us that operate on both sides of the border, and I think we've done a pretty good job of taking some of that friction away. But there's still friction that exists, and I think it's in all of our best interests, and I hear it from customers directly, just to make this more simple.
Yes, I think both you, Derek, and Ramesh sort of hit the nail on the head when you sort of said that, yes, we have this message standard that's being adopted, but actually, how do we use it? How do we actually incorporate real standards on how to use those data elements is actually critical to that frictionless environment that we're trying to drive in that cross-border space, as well as in the domestic space. I should warn you, we're getting some really great questions coming through, and we shall sort of share those around in a little bit. But I guess just before we sort of get to those questions, I'm the only one who can sort of put my hand up and say at my age, but maybe in sort of 5-10 years, when we finally get together, we're sitting there on the deck. We've got the fire pit roaring in with the fire and the heat. We've got our marshmallows. We've got our really, really small drop of brandy sitting next to us. What would we be talking about in terms of the biggest changes that we've seen over the next sort of 5-10 years as we sort of look back? So maybe Derek, I could start with you on that one.
Oh, thanks a lot. I guess the objective is to stay out of the fire, I think, right? You know, we often refer, and I think it was Ramesh that mentioned, it might have been Sue, you know, we refer to payments modernization in Canada as this once in a generation type change. And, you know, I can just say I'm totally thrilled to be part of it. It's a really good question. You know, I often wonder what next year will bring, you know, to think out 10 years. You know, I do see us living in more of a fully digital world. And that means that we've successfully eliminated that paper check. I really think that's within our reach. I think, you know, I mentioned this, the payment is just something that's just going to happen. I think it's really important that we maintain expertise in that space. And I talked about talent, but I think that's just going to slowly more and more, even for business to business, it's going to be, you know, happening behind the curtain, and it's really about the experience, the data, and we're already seeing that trend starting, and I think that's going to continue. I think Canada will continue to be a leader and innovator and exporter of great innovation for the world. I think we've got a tremendous fintech community, and I think that's going to continue to flourish, and through partnerships that we talked about earlier, those are great things that we all have a responsibility to continue to maintain and nurture. And, you know, I do think we'll see some consolidation, continued consolidation, but more from a global perspective. Yeah, you know, if you can tell, I'm really, really excited about this space, and there's such a bright future ahead of us here. And yeah, maybe I'll pass things off to my colleagues.
Okay, great. Sue, do you want to follow that?
Well, that's a tough act to follow. But what I would say is, I was thinking about this question, and also thinking about some comments that Jamie Dimon made a couple of years ago around the world of the financial institution is evolving, and that we're going to need to change our role in the whole ecosystem as we go forward, that we need to not just think about shareholders, but to start thinking about stakeholders, all of those elements of the community. I thought for a minute Jamie had moved to a credit union, but I guess not. But my point is this, really, it's as payments becomes less of a silo, it becomes a greater tool for delivering value, in my opinion. And today, very much financial institutions deliver a lot of their value and relationship through the lending relationship first. And the payments relationship tends to be ancillary and related in a lot of cases. And what I'm seeing with payments modernization is we actually have a moment here for payments, maybe not to be the lucrative revenue stream, but to be a new definer of a relationship with the customer. And that excites me an awful lot. So in 10 years with our marshmallows, I'm thinking that we may not be the rich revenue stream of a financial institution, but we should be a new epicenter for that value. And we need to use PayMod to get us there.
Okay, Ramesh, I'm really sorry. After coming after those great insights from both Derek and Sue, I have to pass it across to you and ask the same question.
Yeah, thank you, David. Clearly around the fire, Derek and Sue have made good points. I think we would have, just to echo their comments really, and structural improvement in the way Canadians move and manage their money. We would have done a great service if we have intuitive, frictionless, seamless experiences for our clients. And an important thing as we go into this open era is to actually do it in a secure way so that the Canadians, they place a lot of trust in the system of moving and managing their money. And it is an important facet of our lives. And I think we would have done a great service to Canadians if we do it in that very secure manner.
Oh, great, thank you. So we've got some great questions coming through. I guess the first one is that, you know, we're in an industry that talks some very interesting language. You know, we've thrown RTR, we've thrown the words ISO 222, we've thrown away around words like finality and instant. So the question coming through is, how do you explain that to the actual end user? How do you explain modernization to a consumer or to a business? Because obviously there's going to be a level of investment that they need to take to adopt and change into this new modernized environment. So I'm looking for volunteers to take that particular question.
I'll start, so you'll be easy on me for some of the future questions. You know, I'm often, my kids will ask me, Dad, I hear you say PayMod, I hear you say payments modernization, but what does that really mean? And, you know, I think it's actually, it's a really interesting question, right? Because we're all very busy in meetings and doing stuff to modernize, to invest in the infrastructure and to, you know, make sure that at the end of the day, as the rules change, that we can still continue to operate as financial institutions and move money based on, you know, the standards, data standards and other policy changes that are afoot. But again, I'll come back to where I started. We need to listen to our customers. Our customers are actually guiding us down this path. They want faster, they want enriched data, they want transparency, they want to see down the road, hopefully, more and more efficiencies. They want to take advantage of those ERP systems that they've been investing in over time. They want drive down their own costs and productivity improvements. They want to increase the customer experience. It's a competitive world out there that, you know, we talked about cross-border. They want frictionless, ease of use. All of these things are very hard today because of, you know, legacy infrastructure and outdated ways that we move payments and move data. We move very little data today. So, you know, we have a huge opportunity and ahead of us as financial institutions, as fintechs, as big techs, as government, as corporates, to really work together here, sequence these changes, not lose sight of the fact that there's a customer that we're doing this work for. We're not doing it for ourselves. We're doing the work. So at the end of the day, we can make a difference in their lives. And if we can add value and make a difference, I think the world is going to be a much better place.
Thank you. Ramesh, Sue?
Sue, I think Derek covered it well. Just a couple of examples on the individual level, whether it's that individual having to rely on emergency payrolls or immediate payrolls at the end of a Friday, or that person delivering something who wants to get paid immediately on payment on delivery. More, people wanting to kind of look at their money management in totality and have a good view of that. For a small business customer who wants not to deal with all the stuff that goes around with managing money, but make it more automated and simpler to deal with, have more customers through payment data, because it gives you a good insight as to how much is coming in from where, and more details around things they don't need to bother with. I think we would have benefited both individuals and small businesses, and large customers. It's an enormous benefit. I won't get into that, but I think it's a lot of value all around.
Thank you for that. So we have a very specific question directed at yourself. The question goes that they were wondering if you could talk further about your experience demonstrating value and modernization to member credit unions, particularly as credit union sector varies very much between the large and the small credit unions, and with how you work with the other centrals.
What a great question. The credit union movement is incredibly diverse. Some of our largest credit unions are very eager for payments modernization, direct access to payment systems, and so on. Some of the smaller players, payments is a very small piece of their business in some cases. And so the investments and the effort associated with changing a lot of their capabilities is really a Herculean effort. So the questioner is quite right. The credit union system is extremely diverse. The way we have approached this is to acknowledge and recognize the need to segment our client base and deliver a different value proposition for different segments in different ways. And so we have done that. As I mentioned, we're close to 300 clients in the payment space alone. And so we do absolutely offer different tiers of services for what they need, because the largest guys don't need us to do as much, whereas the smallest need us to step in and frankly do a lot of things for them, because it becomes inefficient to expect 300 entities to do the same thing. So we have developed that tiered service level. But the one thing that's in common across the board is actually the previous question. It's trying to bring some meaning to what matters first. How do I talk about this? How do I make this relevant to my business? And so it's actually a lot of the value that we've been bringing to date has been to bring people along the journey, to help them understand why it matters and what's in it for them. And if they don't modernize, what does it mean? Not just from a compliance point of view, but in terms of the value proposition for what their customers, their members will actually have. And so we spend a lot of time doing that. And we spend a lot of time working with the other credit unions, because nationally we are also the voice for the credit union system for clearing and settlement. And so we execute some solutions on behalf of the whole country, and for other solutions we just do part of the country. So we need to be very efficient and effective because we're a lot of small players. So we spend a lot of time thinking about how to do that.
Okay, thank you. So Derek, we've got a question for you. And then the question goes along the lines of, should we be viewing instant, the RTR, and data rich as two separate endeavors at first? And is it possible that a financial institution can generate revenue from both separately? So do different consumers see value in one or the other, or do you see it as a combined offering?
It's a great question. As I mentioned before, I think we need to think of data as kind of payment rail agnostic. So although the two do go hand in hand in my mind, we have a great consumer capability in the market today in Interac transfer. And it does move data today. And as we move to RTR and as the market opens, and as we move to an interoperable global ISO standard, I think to some of the examples that we talked about earlier, we're going to see more innovation. We're going to see more partnership, open banking, open APIs, etc., that are going to take advantage of the data that are going to be moving across all of the payment rails, whether that's links, whether that's RTR, whether that's in the US, TCH, the Fed, chips, etc. And as financial institutions, also I mentioned earlier, as long as we continue to focus on creating value for customers, I believe that there's an opportunity to monetize some of those new capabilities that we're building. But we have to remember the customer. We have to make sure that we're adding value in that process, and I believe they'll be willing to pay.
Brilliant, thank you, Derek. Ramesh, just a question for you. Talking about sort of cross-border and interoperability, the question goes, how do Canadian financial institutions and thus Canadians win in the global real-time payments world?
No, great question, and a challenging question too. The thing is, I think Canadians have always been at the forefront of innovation in payments. And I was looking at a map this morning of real-time payments where the whole globe was painted green except for Canada. I mean, I think we've been well served in terms of payments and e-transfers and so on. It's almost, and in the business side, it's almost near real time, right? So what we're going to get more is this data which we've been talking so much about, and a little more immediacy of settlement and always on payment systems, which is 24/7. I think in terms of our global kind of innovation and comparisons, what we'll be able to do is, I think there is a little bit of catching up in terms of, open and creating those use cases above. If you look at those countries who've gone ahead of us, and David, you know this, Australia, UK, and a few others, the overlays are just starting to be built and starting to be adopted. I think we are very much there. Some of these things like request money, for example, already exist. Like Derek said, some of these things exist today in Canada. We need to make the use of the new data coming in to make the experience a little more richer and create use cases which are uniquely Canadian and good for ourselves. And sometimes, we might be able to export some of these ideas. I think there's a long runway and there's a lot of work to be done in the next couple of years. But I think we're setting ourselves very well for success and for innovating for the customer here and getting our ideas out there. So I think we're very much just almost at the starting line.
No, thank you very much, Ramesh. I think that is a great way to bring this session to a conclusion. There are huge numbers of questions that we just haven't had time to go through. So thank you all for driving those questions towards us. And I'd just like to say a big thank you to Ramesh, Sue, Derek. It's been great talking to you. And I look forward to continuing the conversation on, and hopefully we won't need to wait 10 years before we can get around that fire pit. So thank you all, and thank you to the audience for joining us this afternoon.